Most traders lose money because they follow retail plans, not the smart money. So in today's video, I'm actually going to show you guys the best simple SMC entry model, a strategy based on how institutions and banks actually move the market. Whether you are a beginner or you have been like trading for a long time now, by the end of this video, you fully understand the first entry model of SMC trading. Okay, so now if you know that this is going to really be helpful to you and you know that this is what you actually need, make sure you are subscribed to this channel. Now let me go ahead and clear out all these things right here. I'm going to clear them out so that you can get a clear view of the chart, and I'll be switching back to the 1 hour time frame. Okay, I'll be switching to the 1 hour time frame so that you can actually understand everything I'm going to be doing. So now this is the chart. Okay, this is the chart right here. This is the chart right here. You can see it already. Okay, you can see the chart right here right now. So now what is smart money concept, or popularly known as SMC? SMC is a trading approach that focuses on understanding how big institution, that is the smart money, move the market. Now you cannot be trading as a retail trader and expect to be seeing results like often. Okay, you don't expect to be seeing these results often. The reason why I'm saying this is because many people do focus on trading as a retail trader, and that is exactly why you see that most traders end up being the other hand, which is the losing side. You can see right here where I'm marking. You can see these points that I'm marking right here. This is a break of structure. You can just go ahead and name it BOS, which simply means the break of structure. So there is another break of structure. I hope right now you can already even identify them. Okay, you can already identify them when the market is making lower highs, lower highs, lower highs. It's a break of structure to the upside. Now you can see it. This is BOS. Okay, BOS. Hope you can actually see what I'm doing. You just keep on naming them. You just keep on naming them. Okay, so this is another break of structure right here. Okay, I'm just showing you exactly how you can do this. Now we just go ahead and write BOS, and I'm going to be reducing. Okay, I'm going to reduce the size. Okay, this is the last size, so you can see it right here. I hope you can see this is a break of structure, this is the break of structure, and this is a break of structure. And then what happened after all this break of structure, break of structure, break of structure? You can see that the market actually starts showing signs that it want to start a downtrend. From this particular point here, you can see that there is a change of character. I'm just using this small trend to show you exactly how to identify change of trend and how you can actually know what is break or structure. So you can see, okay, we just go ahead and name this change of character. Okay, so I've named the change of character. Now you can see there was a change of character, right? Which strategy should I use as a beginner trader? I will advise you to start with the SMC strategy so that you're going to be on the right side, because you're actually going to be following the people who are making this market, the people that are making the market move. That is the concept. That is just the mind behind this strategy. So you can go ahead now. Let us define this. Okay, so there was a break of structure right here. There was a break of structure here. Can you see that? There was a break of structure here, break of structure, and then all of a sudden the market failed to break the previous high. Hope you can see this previous high right here. The market failed to break that high. Then it creates a lower what? A lower structure, which is also called change of character. This place that the market, because in the okay, this is the rule for the uptrend and downtrend. In an uptrend, the market does not break a low. That is, it does not break previous low. In a downtrend, the market keeps breaking low. It can't break high. So whenever the market breaks a high in a downtrend, you're actually going to know that yes, the market has changed what trend. So you can see here there was a change of character, and then it began to break lows. It began to break lows, giving us what? A downtrend. That is exactly what market structure is all about. Okay, that is exactly what market structure is all about. Now we are going to go ahead to go to the next step, which is actually how you can identify the SMC. Okay, how you can actually identify them in your trade. So now what do you need to do after you know the market structure? You need to know about liquidity. Okay, this is where smart money hunts. Okay, liquidity is where smart money hunts, meaning areas where stop losses are set. Okay, that is where areas where stop losses are set. So the smart money, that is the big institution, they target these zones. Okay, for example, now I'm going to give you guys a clear example on a trade I already made on BTC USDT. So this is the trade right here. You can see that this trade is actually in profit right now. So now you can actually see what I mean by the target what? Stop loss. That is where the liquidity comes in. The target stop loss. Now, if someone was going to trade this, what is he actually going to do? He's going to say, okay, this is a break of structure. I'm going to trade. This is what many people do for trend continuation. People that trade trend continuation, they often go into the trade at this very point here. Okay, they often go in and maybe set their stop loss above this candle and then target like 3 rigs reward. Okay, so this smart money is against anybody who is trading like this, because this is just a way that they operate. Okay, this is a way they operate. You often see this price, it will just spike above this high, okay, you're going to just see it go. You see the way that it take your stop loss out if you were trading with just the trend continuation pattern. So this is exactly how it works. Yes, it's still a downtrend. You are trying to catch the continuation, right? But you can actually see that it didn't work. And then secondly, you check here and you're going to see that it actually worked here. Okay, let me just go ahead and draw this line so that you can actually understand what I'm doing. You can see that right here. Let me arrange it. You can see right here it actually worked. Okay, so I'm trying to make you guys understand something now, what the smart money means. Okay, this is where the big institution play in the market. Okay, so maybe someone might have been following this trend continuation pattern, and you see that there was a break of structure to the downside. Change, that is the trend have changed, and then this is a continuation pattern. Yeah, and then you can see that it went up back, break structure, and instead of continuing from this previous break of structure here, it failed. And then you can see that many people would be stopped out. That is exactly how it works. Okay, now I'm going to show you guys simple steps for you to identify this smart money concept move. Now let me go ahead and clear all these things for you. Let me go ahead and clear all these things for you so that I'm going to show you exactly how to identify them. Okay, I'm going to show you exactly how to identify it. Okay, so the first thing you need to do now is to know your bias. Okay, so how do you know your bias? I already marked this place. Let me go ahead and then put this here. I already marked the first zone. So this is going to be named change of character, right? So this is going to be named change of character. You can see I already named it now change of character. Let me go ahead and clear this to the backside. Name the change of character, and this will be your break of structure. We can ignore other break of structures. Okay, we can actually ignore other break of structures. That is, there's a break of structure right here. Okay, if you want me to just show you, put it, yeah, this is it, a break of structure right here. So there's a break of structure which is BOS right here. So you can see the break of structure right here. So you can see after the change of character, there was a break of structure, a continuation of the trend, a break of structure. There's even another break of structure right here. If I expand the chart, you'll be able to understand all these things properly. Okay, if I expand the chart, you'll be able to understand it properly. So you can see the break of structure right here. Now, after a break of structure, what do you need to do? I already marked this out now. I already marked this out. You can see the change of character, a break of structure, break of structure, break of structure. So what do you need to do after you have seen this? All you just have to do now is to check out for your FVG. You have to check if there is a fair value gap. Okay, you have to look for the fair value gap, and there is a fair value gap here. So I'm going to go ahead and actually let us go ahead and then yes. So this is the fair value gap. Okay, this is the fair value gap. I can actually just use this now so that we can identify the fair value gap very, very clearly. Okay, this is a fair value gap. This is a fair value gap right here. You must identify your fair value gap for you to validate your trade. Okay, you must identify your fair value gap. That is for you to be able to know that yes, there is liquidity in this particular order block you are actually going for. Okay, you need to know that yes, there is liquidity in this other block you're going for. So you must identify your fair value gap, which is called the FVG. So now after identifying your fair value gap, the FVG, now you look for that origin that caused the break of structure. What caused the break of structure is this, is actually this candle here. You can see the candle here. This is the candle that caused the break of structure. This particular candle caused the break of structure. You go ahead and mark this candle out. Hope you understand me. You go ahead and mark this candle out. So you can see what happened here. Okay, you can see exactly what happened here. Once you mark the candle out, it's very, very important. Very, very simple. Okay, now these other blocks, okay, they are the bullish or bearish candles before a strong market move. Do you understand me? It is the bullish or bearish candle before a strong market move. They often act as zones where the smart money placed order. This, okay, see, let me show you. Let me just tell you what this thing simply means. There are already orders here. Okay, there are already orders here. This zone, there are already orders here. You can see that the market come back to retest this zone the first time, try to go off, fall down back. It came back again and then went down. There are already orders in these zones. All you just have to do is to find the right zone. You know, sometimes most people do fall for tricks of maybe they're actually going to treat the wrong zones. Okay, you just need to find the right zone. You need to find the right one. You can also see right here. I don't want to complicate this for you. Take a look at this. After the break of structure here, we are going to talk about that in the next example, because this one happened, it just happened like a flash. Okay, so you won't actually spot it. I was not even able to see it previously. So now let us take a look at this now. After that, all you just have to do now is to come back. You can go ahead and go to the 15-minute time frame to minimize your other block. That is, you want to minimize, if you want to minimize your risks. Hope you understand me. You can just go ahead, go to a 15-minute time frame, and then boom, you can minimize your risk by looking at that candle that caused the break of structure. Can you see it right here? I hope you can see it. I hope you can see it. So now I have actually minimized the risk potentials for this particular trade by marking out the origin that caused. This is a candlestick pattern. Okay, this is a candlestick pattern like an inverted hammer. Maybe it should be an inverted hammer, so you can actually understand exactly what I'm doing here. So you just go ahead now, you mark this out. Once you mark it out, you're actually going to be waiting for price. You can see that is exactly how I took my trade. You're actually looking for price to come to this particular zone. This is a very perfect setup. So you just go ahead, place your stop loss right above this place, and then boom. This is a 1 to 10 weeks reward trade. So I should even be closing the position already, because this trade is I think a 1 to, if I take it here, it should be a 1 to 10 weeks reward trade. Okay, so this is where I placed my stop loss, and you can actually see how far and how good the trade has been. Okay, you can actually see how far and how good the trade have been. It's a very simple concept that when you understand, you actually be seeing a lot of trading opportunities. You actually be making a lot of money from this. Now I talked about the other example that we're looking at, which is very close to it, right? So you can see that I marked a break of structure here. Most times, if you mark a break of structure, I advise you to go to the smaller time frame to look for your entry. Because if you stay on the 1 hour time frame, you might even miss entry. You might just miss a lot of entry. Now, let's look at the key steps for you to follow when you want to actually analyze the market with SMC strategy. Now, after a break of structure, when the price breaks a key level, it's a potential signal in the trend. That is, whenever you are just seeing a break of structure to the either downside or upside, it simply means that opportunities are coming for you to trade. That is the only thing you should be watching out for. If you're looking for it, that is the first thing you even be watching out for. Now you'll be looking at this, okay? This is your clue that smart money is shifting direction. Hope you understand me. They're actually making moves in the market. Whenever a break of structure happens, they are making moves in the market. They are making moves in the market. Now, depending on how higher the time frame is, that is exactly how good. Okay, that is exactly how good this setup is going to be actually strong. Okay, so you just have to take note of analyzing from the higher time frame and come down to the lower time frame. Now let's go to the next step. Okay, now you have to identify market structure. That is the step one. After you identify market structure, you have to look for liquidity grabs, that is price taking out previous highs or low. Now step two, you have to wait for break of structure. That is it. You have to wait for break of structure. When they say identify market structure, you have to know if the market is on downtrend or low or uptrend. When they say look for liquidity grabs, you have to look for those places that, yes, you're very certain that, okay, due to the price shift, due to the way that price reacted at this particular place, there is liquidity here. That is, there is smart money worth moving the market at this particular area. Hope you understand me. That is when you'll be looking for imbalance. Okay, that's where you'll be looking for the imbalance candles. You'll be looking for other signals that shows that, yes, smart money are in this trade. Hope you understand me. Now you have to wait for break of structure. Okay, you have to wait for break of structure in the opposite direction. Step 4, you have to mark the other block that caused that break of structure. For those of you that are asking what is the other block that caused break of structure, other block is actually the last candle, or you can actually call it the previous bullish or bearish candle before a strong market move, that often act as a zone where smart money place their large orders. I hope you understand. Anything you don't understand, you actually just need to go back and watch this video again so that you can understand it. Now, step 5, you have to wait for price to return to that other block. Patience is a virtue. Hope you understand me. You have to actually wait for price to return to that other block for you to take your trade. If price do not come back to mitigate your other block, you can't take any trade. Now, let's look at that example I'm telling you guys about. Okay, so right here you can actually see that there was a break of structure. Now we are going to mark the other block that caused the break of structure. There are actually two other blocks here, but I'll mark the original other block that caused it, because I shouldn't be using this. So I'll just go ahead and place this. Hope you understand. There are two trades that happened here last week at the same time. So you can see it right here. Let me go ahead and clean this out. Let me go ahead and clean this out so that you will not be confused. So you can actually see this is a second place now. You can see as price just tap this other block. Hope you're understanding me. You can see exactly how price tapped the other block. Hope you're understanding me. Your stop loss will be just above it. This strategy comes with a very low risk, and you can see the move. Hope you understand me. This trade, if it has been taken, it should be 1 to 10. Okay, 1 to 10 risk reward, which is very good. You would have made double moves last week with this trade. Hope you understand me. You would have made double moves last week with this trade. I hope you understand exactly how this concept works. I hope you can see exactly how it reflects whenever you are actually consistent with this. Okay. Now, if you are even looking for a fair value gap, I don't know if there's a fair value gap. Yeah, a fair value gap is actually right here. Hope you understand me. There is a fair value gap. So this is what you should be doing now. These are the steps. First of all, identify market structure. Look for liquidity grabs. You can actually see the imbalance in this candle. Yeah, you can actually see the imbalance right here. That shows you that there was a forceful movement that caused the break of structure. Whenever you are seeing maybe just one candle, maybe you are seeing the market making moves, a moves that should take like 5 candles, and you see the market do it in one candle, shows that there is liquidity right there. Hope you understand me. Now you have to wait for break of structure. Once you see a break of structure, mark out the other block. Okay. Now you have to wait after you have confirmed everything you need to see. Then you wait for the price to get back to your other block. It's very simple. It's very simple. This is the first entry model. Okay, I will not be complicating things for you. This is the first entry model. Now all you just have to do is start practicing. Start practicing. Anything you don't understand, you come back and watch this video again. Now, so that is the simple entry model for the SMC. It is clean, powerful, and it is very beginner friendly. You see, when you're starting trading with SMC trading, if you look at first, it will be very simple, clean, and powerful. But when you go deep into it, you will know that SMC strategy that is following big institution, it also comes with a way that you need to trade with price action, you need to trade with other confidence. We hope you understand. You need to trade much more better. It's not just this alone. So make sure you watch this video to the end. Okay, for those of you that have watched this video to the end, if you found value in this video, give this video a like, comment SMC below so I will know you are learning with Michael FX. Don't forget to subscribe and turn on the notification bell icon for more forex trading strategies every week. This is Michael FX Trade. I will help you learn how to trade and grow. I'm going to see you guys on our next video.